everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, keep in mind a couple of things. Obviously, there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense to you. And keep in mind that as we go over the different ideas and information, it's coming from an educational perspective and shouldn't be taken as financial advisement. Now, when it comes to risk management, it's built into our order window in our web trader, which we're about to utilize, and our mobile app tools that allow you to understand how much you're risking to your stop loss, how much you make to your take profit. Those calculation features are built into the order window. So the risk management side of things is made quite a bit easier by using our web trader and app. Now, to log into the web trader, we just log in the upper right-hand corner here and use your email address and password, and you'll be in the web trader platform. You can trade on your MT4 and MT5 accounts from this one location, and the same is true with our app, which has the same functionalities that we'll use here in the web trader. Now, our focus today is technical analysis, but it makes sense to talk a little bit about the fundamentals before we jump in to the technicals. It's good to know from a fundamental standpoint, at least which way you think the wind is blowing, so to speak, with different instruments that you might trade on. And so what's the main big driving story today? I think the biggest data and news that came out with regards to the markets would be the announcements out of the US, the PPI data. It's the producer pricing index came in lower than expected, which it's kind of a repetitive pattern the past months really out of the US in particular, that inflation has really been more and more under control. Both the CPI data, which is the consumer pricing index, and the PPI data have been coming in for the most part at or below expectations for some time, which is a sign that inflation really has gotten under control. It's also a sign that the economy maybe is slowing down a bit, but that was the objective in the US and in many countries when inflation was up globally, raising interest rates to try and bring down inflation. And so how does that work? You raise interest rates, it makes it more expensive to get your hands on money. If you borrow money, it costs more, so you can't afford to get as much cash in your hands through the borrowing method, and so that slows down purchasing, whether it's using credit cards that have higher interest rates or businesses trying to expand using business loans as a way to fund it. Everything becomes more expensive with higher interest rates, which then in turn creates less spending, which in turn brings down prices because demand drops. And so that was the idea of higher interest rates, was to bring down inflation because through the pandemic, if we go back far enough, what brought all that inflation in was ultra low interest rates. So interest rates were brought up higher and higher and higher until inflation started to come down. And some countries, faster than others, have lowered interest rates back down as inflation dropped. We've seen multiple rate cuts out of the European Union, Australia, UK, etc. over the past year, whereas the US, since the US, just before the US elections, the presidential election last year, going back to October, November range, the Feds in the US, the FOMC committee, and Jerome Powell specifically has saw fit not to lower interest rates any further, even with lower and lower inflationary data on a lot of the numbers. So the situation now is, and we can use today as a reflection of the greater picture, as lower inflationary data comes in, which yes, signals economic slowdown, if you look at it from that perspective, which usually is not a good thing, but the markets have been reading these low PPI numbers, low CPI numbers as an increased likelihood that rates should be cut. Up until the Jackson Hole Conference, which was a big meeting of financial people and bank leaders and government related policy experts that gathered in a city called Jackson Hole in Wyoming in the US. It's an annual event. Up until then, Powell's been very resistant since just before the US election to lower interest rates any further. Some viewed it as political, some not. But finally, and unexpectedly maybe for many, in that conference, he alluded to the fact that he thinks maybe it is time to start cutting rates, which was somewhat unexpected, but welcomed by the markets, and the markets kind of surged up. The equities went up in response to what he had to say. So today, with the PPI data coming in lower than expected, again, markets kind of pushed up a bit, but with hesitancy, because tomorrow we have the CPI data, which is viewed even with a larger microscope. That's the consumer pricing index, which shows how much has the lowering of the producer prices, how much has it carried forward to lowering the cost of consumer goods, groceries, gasoline, automobiles, etc. Everything that you go out and buy, clothing, whatever it might be. So the consumer pricing index numbers out of the US are tomorrow, CPI data, and maybe there's some hesitancy right now as it leads up to that, and we have to keep that in mind. Now, I haven't heard anything new, haven't seen anything new about tariffs. There's nervousness about that. When will the Supreme Court in the US take up the objection to the tariffs that came from a lower court judge who basically said they're illegal, that the US Congress has to pass tariff increases and the president can't just do it through executive action, although most all presidents have done that. In the US, it seems that the courts want to object to the current administration using that same power. So lower court judge found the tariffs to be illegal and said they should all be removed, but said they can stay in place until the Supreme Court decides if they agree or not. So we're kind of waiting on that. There was nervousness about it last week when that news first came out, but that seems to have died down. I think there's the expectation that the Supreme Court will uphold the administration and the president's right to use tariffs for their emergency power authority with the economy, but we'll see. That's still out there, but there was nothing today shaking the markets with that storyline. So mostly the focus right now is that lower than expected pricing information for producers, the PPI data, and what will the CPI data look like tomorrow. Now, the rate decision is like a week down the road. So it's not this week, but it's coming up soon in the US. So the CPI data tomorrow is also very important. If that CPI data comes in below expectation, maybe the markets cheer that. Now, at some point, if data keeps coming in below expectation, there might be some fears of too much of an economic slowdown. Then you start worrying about recession. As for now, the markets have been kind of cheering this lower than expected data with the anticipation that that might mean for sure there'll be rate cuts coming up later this month, but we'll see on that. So with that in our minds, we can go into our technical analysis, understanding that if it's viewed that there's a slowdown going on, maybe there's less demand for something like crude oil. If there is such a slowdown in the producers and then in the consumer pricing, means demand is slowing down, and when demand slows down, there's less need for energy, etc. So you can start to build a case for which way you'd prefer to find an entry point for different instruments right now. Okay. So what can we look at? We can look at gold. Why gold? Well, gold went rushing up to all-time highs again. Why? Increased expectation of rate cut in the US is one major reason. Why would that make gold go up? Rate cuts tends to weaken it. They tend to weaken a currency. So rate cuts on the USD, gold could go up against the USD easier. And also gold tends to be a safe haven if you feel like your currency might be devalued soon. Meaning if you lower the interest rate, especially if they cut it more than, say, 0.25%, maybe they do a 0.5% cut or a full percent cut, which would probably shock a lot of people. But fear of inflation coming back into the currency, if they start cutting interest rates too fast, can lead people to buy into safe havens like gold as well. So while the stock market also went up because they like the idea of lower interest rates, so too did gold, because gold is an anti-inflationary safe haven. Now, if we want to bring up the gold chart, first let's click on the signal, and it's a buy signal. Doesn't surprise me with what we just talked about. Okay, the fundamentals say buy gold. It went rushing up to all-time highs, and it's actually pulled back a bit today. So it's just above a support level here that we call the pivot level of the signal. As long as it doesn't break below the pivot level of the signal, it remains a buy. So if you were going to buy off this support level, which is also the pivot level, we see it's held on this price, holding, 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 holding. Okay, it might break below it. If it does, your stop loss could be just below the pivot. You can buy off of this support level with take profit recommended up in this area here around 36.73 and up. Okay, so that's the signal. Let's see if we can get the chart to come up for us. Okay, here's the gold chart. We can start to draw some lines based on the signal. So pivot and support level at 36.35. So 36.35 is right here. Okay. Why is the support level there, the pivot level there in the signal? Because this is a price where gold has been snaking above and below, above and below. So it had trouble breaking above. Once it went above, it sat on top of it, sat right on the price. It wiggled below it, went right back above this price, and then it held as support right on this price. It hit again and bounced, hit again here and bounced, tested it and went right back up. It wiggled below and it became support. Resistance again. Once it went above, it became support again. And so this price, from a technical perspective, looks important because it keeps trying to go above it, below it, above it, below it, above it. And now we're right on top of it. If it goes below, you could get out, right? That's the support level in the signal. And what they're saying is if it breaks below there, you could look for further downside, maybe down to this next price level here. As long as it stays above, we're looking for upside, according to the signal, at 36.73 and up. So 36.73 is here. Okay, so that's basically at the all-time high. Okay, all-time high was hit just in the past couple days over and over again, finding resistance and breaking through. You keep seeing, okay, resistance and a breakthrough. Resistance, resistance, resistance. It breaks, finds new resistance, breaks through, finds new resistance, and now what's going to happen here? It's possible with the CPI data coming up tomorrow and nervousness that what if that data comes in hot? What if it all of a sudden comes in higher than expected on CPI data? Will that affect Jerome Powell's decision next week as to whether to cut interest rates or not? Maybe it'll make it so instead of 0.5% cut, it'll be only 0.25% cut. That sort of thing if CPI data comes in higher than expected tomorrow. So those fears could cause maybe the USD to strengthen back and people to buy back into the US dollar if they think maybe the CPI data could be stronger than expected tomorrow. So you can see how the uncertainty of that large fundamental announcement tomorrow could work against you on a technical signal where you're hoping the support level holds. Okay, the PPI data already came in lower than expected, and we saw gold push up. Okay, it didn't push all the way up to the all-time high, but it went up a bit. There was this jump here earlier. Okay, coming up to this resistance, but now it's pulled back down. So the short-term signal from a technical perspective is buy. From a fundamental perspective, longer term, I think maybe it also says buy from a fundamental perspective with rate cuts maybe coming. But in the short term with CPI coming, I don't know if I trust the support level as much. So you kind of get stuck in a situation where you see a technical signal, you see it's hesitating to go up. It's kind of trying to test this support level here, and you wonder if you should trust the signal. When you're in a situation like this and you know there's big news coming, if you, let's say, feel 60% certain that this should go up, but you're not sure about the timing, or maybe even greater certainty than that in your mind, but you're not sure that the timing is right, exactly right now, what can you do? Rather than using a stop loss, which, if I'm doing a short-term move, I either put my stop loss below this support level or below this one if I want a larger risk, but to be more patient with my stop loss. The problem is the more patient I want to be with my stop loss and I put it further away, I have to risk more or take a smaller trade. there's another option. When it technically sets up this way, it's not uptrending yet. So I don't feel like technically this is an uptrend that I want to trust this signal, because on the 5-minute candles, it's a downtrend. Okay, high point got lower here to here, low point got lower from here to here. If I draw diagonal lines, that's a downtrend. Okay, sometimes I have a hard time buying in a downtrend. Okay, technically speaking, that's downtrending. From this point, we have resistance and we have downward movement with the lows getting lower and the highs getting lower each time it's gone up and down. So this doesn't feel like an uptrend right now in the short term. And this signal is a short-term signal. The stop loss, the support level that we're saying it has to stay above is very close. And so with that big CPI data tomorrow, I'm not so confident that this support level holds. So technically it's telling me it's a downtrend. Fundamentally, there's uncertainty with a big announcement tomorrow. And with that combination and the downtrend confirming that it's not rushing up right this second, I probably want to risk manage this perhaps in a different way than is typical. So if I want to buy on this, if I like this pullback as an entry point, but I'm afraid it could pull back a bit further before potentially going up, well then I can protect with something like AvaProtect. Okay, let me go back to those 1-hour candles. Okay, if I'm using AvaProtect, let me get rid of some of these lines. I don't have to put a stop loss here or below this next support level here, which was the old resistance, at least not yet until the protection would end. What I can do is say, there's a big announcement tomorrow. So if I protect this for 1 full day, that gets me to 5 p.m. my time tomorrow, and that announcement my time is 3:30 p.m. tomorrow, the CPI data. So I'm protected no matter where this goes for an hour and a half past that announcement with 1 day's protection. Okay, now I can take a look and say, if I do 1 lot, that costs me $1,700. It's 100 ounces, that's a pretty big position. I can do half a lot, and that costs me $872. Maybe I'm comfortable risking a certain percent of my balance per trade, whether that's to a stop loss or for the cost of the protection. It would make sense that you manage risk in a way, something like that. So I'm just going to use a number that I typically use as an example. If I'm comfortable risking 1% of my overall balance per trade as a maximum. You could have less than that. You could be comfortable with 0.5% or more than that, 2%, whatever the case may be. But you should have that number in your mind. So if I'm comfortable with 1% risk per trade, so that'd be around $627 on this account. So if I then do 0.4, that gets me closer. 0.35. Okay, now I'm under 1%. I'm risking, the cost of 1 day's protection is $610, which is less than 1%. So I can be protected past those announcements tomorrow by an hour and a half. And if my take profit is just up at the all-time high without having to break it, so let's say 36.70, okay, I would make slightly more than the cost of the protection. Okay, to me that doesn't feel worth it. I'm paying this up front, and the best case scenario, if this is my take profit, is I make a couple $100 more than I paid for the protection. So I need to start looking bigger if I'm going to follow this strategy. So if it is big CPI data, perhaps then I believe it will break yesterday's high and or this week's high and be able to go to a round number like 3,700. Okay, and that makes sense if it has enough energy to test the all-time high. If it does break it, it could be on its way to the next round number like 3,700. So if I plug that number in, Now all of a sudden I could make almost $2,000 and the cost of the protection is $600. So if I'm right on a move like this 1 out of 3 times, I'm still making a profit. So even with 33% accuracy with this type of setup, I would still profit. And if I can be right better than that, 40% of the time, 50% of the time, certainly you're not going to win every time. If you're risking 1% and you can have an overall profit by being right 40% of the time or higher, then maybe that's a pretty good strategy and a good risk management plan. Certainly gold will have big movement with the CPI data. The question is which direction? Trusting a short-term support level right now, technically speaking, feels a bit more risky because of that CPI data being an unknown between now and tomorrow. So protecting yourself in a different way might make sense. Now, you also could look and say, you know what? Maybe I want longer time period to reach my take profit, meaning I could do 2 days protection. Doesn't cost me much more, 783. 1 day was 610. It's only like 100 and something more. So maybe I'm willing to lower my trade size a bit. Now it costs 671 for 2 days, say 27, 28. Okay, so 27. So that trade size, just over a quarter of a lot, cost me less than 1%. Okay, I have 2 days protection, and I still would make more than double the cost of the protection. Okay, so it's up to you, right? You can close it earlier. I'm doing 2 days protection, but this gives you more time to try and realize the price that you're going after. And that's up to you how much protection, what length of time you'd want. As the protection gets near the expiry time of the protection, you should check back on the trade, maybe close it if it's in a nice profit that you like, or add a stop loss before the protection ends at a spot that makes sense to you. So that maybe you're preserving profit if it's pretty far in profit and you want to put your stop loss at some level of profit to preserve that, or even if it's in the negative, to add a stop loss to let it keep going but protect any further negative movement. There are a lot of things you can do with that as the protection nears its expiry if the trade didn't close yet. Okay, so you have that option of different lengths of protection. But once you open the trade, then that length of protection is what you're on. You can't change it at that point. So I'm going to leave 1 day protection, brings me a little larger profit potential, a couple $1,000s, and I'm protected all the way past tomorrow's announcement by an hour and a half. Okay, so I'm in. So now I've opened the trade. I've been charged the 610, which is less than 1% of my balance, and now I'm risk-free. I don't have to sweat it if it breaks this support level. And I hope that signal that we looked at that expects it to go up into this zone here, 673, 680, 690 is what that signal was showing for a take profit zone up in this area. Hopefully it does that because we'll have an overall profit even with the protection paid. But if it doesn't, we don't lose anything more than 1%, and we can be patient in case it dips down and then goes back up. We don't get knocked out of the trade because we didn't need a stop loss yet. Okay, so just a unique way to protect. If you like the technical setup, there's a technical signal in this case telling you to buy, but maybe you don't like the fundamental situation perfectly right now, and so you choose maybe to protect in a unique way like we just did with AvaProtect. I'll pause for a moment. Any questions, comments on what I just walked you through with gold, the technical setup, or the rationale of using AvaProtect? Okay, and I don't see any questions yet, but if any pop up, I will address them as I see them. So what about something like the Euro USD? Certainly, if rate cuts are expected in the US, that could be bearish on the US dollar, meaning US dollar might feel a bit weaker against other currencies. Now that effect already occurred ever since the Jackson Hole conference that I alluded to. The expectation of rate cuts was already there, so those movements occurred leading up to now and leading up to the rate cut next week, if it happens, or rate decision next week, I should say. I mean, they very easily could say, no, we're not going to cut rates yet. I think many would be surprised by that, and some may be even angered by that. But the situation is we don't know for sure what Jerome Powell and the FOMC committee will decide. It's thought that they're going to cut rates. And a lot of movement occurs prior to rate decisions based on what is expected to occur leading up to it. So the phrase is the price is cooked in before the event actually happens. And so perhaps the USD already did its weakening leading up to the rate decision. So once the rate cut might occur, you don't actually have a rapid weakening at that point. Sometimes you get the opposite movement than what you expect right as the event occurs. Okay, so we need to take a look what's happening technically on the chart. Maybe what is the technical signal? Euro USD. Okay, Euro expected to climb against the USD, but it's looking exactly like gold, right? The signal said gold should go up against the USD, and it was pushing down towards the support level. I see the same thing with the euro, probably for the same reason. Why? Uncertainty about CPI data tomorrow, I think, is one major reason why some of these signals are not just rushing up to the take profit. There's some nervousness about what will those numbers look like tomorrow. Now, the PPI data from today, it's looked at less than the CPI, but it's working for this signal, for sure. The weak PPI data works against the strength of the US dollar in general and might help this signal to eventually bounce off of the pivot line. The pivot line is here, this one here in the signal. So if we expand the chart, let's do our own technical look. We're on 4-hour candles. Let's go to something smaller. And so, the PPI data came in weak, and what happened? We saw the US dollar go up in the hours that followed. I'm sorry, the euro go up against the US dollar in the hours that followed, which makes sense. Weaker than expected PPI data, increased expectation of rate cut from that perhaps, and up went the euro against a weakening US dollar. There's a pullback here because, okay, there's nervousness about CPI data tomorrow. We're not sure, but it doesn't erase the PPI data that already came in. So we've got a couple support levels. So we've got one here. This is from the end of the weekend into Monday. So this was Friday here. This is Monday here. So the price held at this level earlier in the week and went up with the USD weakening. Down came the euro back to this support level, and it looks like the other one that we looked at with gold, where it's snaking above and below, above and below, above, below, above, back to the line, snaking on this price pretty much all day today. The PPI data is the only thing you can see at the moment in time when that data came out. You see the spike where the USD weakened enough to allow it to go out of this tight movement, this tight range, and then came right back, and then worked its way back up out of that tight range, and now came back again. So this is not a strong uptrend view for this signal. So again, you could look at AvaProtect if you think in the bigger picture that there will be rate cuts and that the CPI data maybe will come in weak like the PPI data today. And so you think by after that announcement tomorrow that maybe the euro will be riding up. And at the same time, the technicals are telling you to buy with the technical signal. Certainly, this is an area of hesitation. So if it does go below, it looks like it's going to maybe stay near this price until some bigger news hits. So the technicals are saying this is a sticking point. It's not a secure support level because we see it's been broken once, twice, 3 times, and it looks like it's going to try and break the support level again, which is why I'm not in a hurry to rush into this signal. So, I have people ask me, what do you think about the signals coming from Trading Central that are on your platform and in your app? I lose as much as I win with them. And what I say to that is, you need to qualify which signals you trust most. Make sure you pay attention to what's happening fundamentally right now, what's coming up fundamentally soon that people are maybe nervous about, and then go in and look at the technical movements. And so right now I see a downtrend. If we go to 5-minute candles, That's a downtrend. Why is it a downtrend? It just broke the 5-minute candle support right here. Okay, this was support, support, broken, downtrend. It also broke this support level here, where it had hit and bounced. So it broke this little support down. It bounced a little, broke that support, tried to go up and couldn't, and came down now to this area, and looks like maybe it wants to come down and test this support level here that we drew. So, the pivot line's at 116.95. That's, if we want to move this down, that's here. So that's this support level down here. Support, support, support. This is a bigger support level than these small ones. So if this indeed makes it to this support level, it's been there longer, and that's why this is the pivot line, saying if it goes below there, then it's a strong downtrend. Then they say sell. Okay? So as you start to analyze the smaller candles, you can start to see what they were looking at here with this support level. And now you see that this easily could drop down to this support level without being an overall downtrend on the 15-minute candle screen. But if it breaks below this price area, certainly that's a stronger downtrend. Okay, so in a situation like this, I'm looking and saying, all right, it's not uptrending now. It's been downtrending for several hours now. The signal is to buy. The fundamental news, they keep talking about rate cuts probably coming. So the bigger picture is maybe the USD weakens. So if you want to trust this support level down here, you could follow this signal, get your stop loss below it. Knowing that there's big news tomorrow that we don't know what it will be, the CPI data might change that plan. If this was a day without a big announcement tomorrow, I would trust this support level more. And this is what I mean by qualifying which signals and when you will trust those signals. Again, it's a big difference to have the CPI data tomorrow. If it already came out today and there isn't a big inflationary data release tomorrow out of the US, then I would be looking at this support level completely differently. I'd probably follow this signal and put a stop loss down here. But because that big data release is tomorrow, and this is trying to downtrend for the past 3 hours, it looks like there's nervousness about that. It did not run straight up to the take profit. If I am going to go long on Euro USD, which I don't even have to do if I don't like the setup, but if I am going long, I'm probably going to use AvaProtect once again. And I'd be looking then at bigger picture, saying, I understand it might break this little stop loss or this little support level here, and that's the bigger one, but on 4-hour or 2-hour candles, all of a sudden it doesn't look like it's that far away. Okay? So if you don't trust this, but you still want to buy, then AvaProtect makes sense because you can put a day or two's protection. And even if it breaks, it won't, you don't have to have a stop loss yet. And by the time the CPI data comes, it could have come way down here. You're still in the trade because you're not losing anything more while you're protected. And after the data release tomorrow, you still are protected, and maybe it comes flying back up and you realize profit on a trade that started out bad, and you were able to stay in the trade because you didn't use a stop loss. In this case, you used AvaProtect. Okay, so if you feel like you want to trust this support level, but you're a little nervous about it, you want to buy, but you're not sure about the timing, but you're afraid you might miss the upward move, then you can do the trade sooner, like now, and protect it for a longer period of time. Okay, but I would also say, if you're so nervous about a trade, you don't have to take the trade at all. You can look for something different. Okay, now we did an example with AvaProtect with gold. So let's go a different route with this potential trade setup. Perhaps you say, I'll only enter this trade if it comes down and tests the support level. If it gets down, say, to here, this where the pivot line is, then maybe I'll have a pending order to buy because it held better at this price level and get my stop loss down below these wicks. It would have to break that support level because it's had trouble staying below this price for some time, all the way back to here. Okay, we're going back to last week since it was below this price. and we have big news tomorrow that there's uncertainty, maybe in your mind, if it reaches the bigger support level, it shouldn't go flying through because we still don't know what the CPI data will be tomorrow. So perhaps you feel it'll bounce like it hit here and bounced, hit here and bounced, again. Maybe you expect the same thing up until the actual data comes out tomorrow. Okay, and if we take that approach to diversify a little and we use our entry point as the support level, the technical support level down here, which is the pivot level of the signal we looked at, so then I'm not going to use AvaProtect. In this case, I'm going to use a pending order, execute when price hits. If the price hits 116.94, as an example, entry price, 116.94, and I need to be on, buy, okay? Execute when price hits, oh, I'm sorry, I'm in the wrong spot, 116.94, there we go. Then my take profit, if I'm entering here, just before this support level, my take profit could be just up to this high here, today's high, without having to break it. So I could do take profit right about here, which would be 117, say 25, without being greedy and going for a higher level. 117.25, very realistic to hit. If there's uncertainty about what the data will be tomorrow, if it bounces off this support level, it's gone up there a few times with these bounces, and so not unrealistic for that to happen again, leading up to the data release tomorrow. So nice support level, took a lot of momentum to break through it. Usually when that happens, you see this big breakthrough candle to get above this price, it would take a lot of momentum to get below that price. I don't see the news having hit yet today to have that much momentum to re-strengthen the US dollar. It could happen, a headline could hit, but I didn't see any big news that should strengthen the US dollar. The biggest news was the PPI data, which serves to potentially weaken the US dollar. So I don't see a reverse of this big breakthrough candle up necessarily happening at the support level to go flying below. That being said, barring any new headlines or new unexpected announcements coming. All right, so, which is why we use a stop loss to protect us sometimes. So if I get my stop loss below this lowest wick, it would have to have a nice downtrend to hit my stop loss, 116.80. Okay, I've got my take profit up just before this resistance up here. And so my potential profit is more than double my risk. All right, and it's using this whole support area before it would hit my stop loss. The reason we have such an advantageous setup is because we're waiting and hoping that it'll approach the support before we're going up. The opposite of what we did with gold. We didn't wait for it to pull down. The example was, let's use AvaProtect and then we can be more patient with it. So in this case, we're taking a different risk management approach, using the technical support level to decide when to enter and where the stop loss and the take profits would be. All right, so now we just need to adjust the trade size to be at the level of risk that you're comfortable with, because we have the technical setup. These prices are determined by the support and resistance levels, and so now we just need to adjust the trade size to be the level of risk and potential profit that you want. So if, again, I want to risk only 1% or so of my account, if I do 4 lots, I'm risking 560. If I do 5 lots, I'm risking 700. So I need to do something between that, 4.3, let's say, and I'm risking under 1% of my account. So maybe I can do 435, and that's almost exactly 1%, little less than 1% of my balance. So I'm going after a profit of over 1,300, risking about 600. So more than 2% gain on my account I'm going after, and risking less than 1%. Okay, so that setup then fits my risk management and profit goals, and the technicals seem to make sense with the old resistance that took a lot of momentum to get above, using that as our support where it's held quite well and only getting out if it breaks below these wicks. Then we would assume, okay, something went different than expected fundamentally if that happened, because that would be a technical breakthrough of all of this support if it hits our stop loss down here. Okay, that's the strategy. So then we can just go ahead and click buy. And what you'll see is it's not an open trade, obviously. Why? because it's in the orders. If you go to the order section, it's sitting there waiting for the entry price to hit. Just to review, the technicals really determined this strategy. The support level determines where our pending order enters. The fact that it's a downtrend on the 5-minute candles determined that we don't want to do a market buy right now because it's downtrending strong on the 5-minute candles. So we use the current trend on the small candles to say, maybe it's better to wait and see if this is going to approach the support level before we enter. Okay, so both of these trades are with the understanding that maybe you have a preference to buy. I'm not saying that you should, but we're going into this simulation assuming that you feel like the sentiment in the bigger picture is the US will cut interest rates. And so you feel like not too many support levels should break with this Euro USD, at least not before the CPI data tomorrow, because we don't know what it will be. Why should all these support levels keep breaking and strengthening the USD when the only thing we do know is there's a lot of expectation of rate cuts, which works against the strength of the USD. So we're using the fundamentals and then also the current trend to determine how we want to use this technical setup. In this case, we used a stop loss waiting for an optimal entry point right above the support level. And in the other case, we went in with a market move in case everything reverses now on the gold, but with a different protection scheme, with a protection that's more patient without having to use a stop loss right away. Both in the same direction, though, kind of anticipating maybe the USD eventually will re-weaken based on the PPI data that came in earlier today. Okay, so this is an example of using fundamental news to get in your mind which way you think the wind should be blowing, and then using your technical analysis to find the entry points and exit points and the strategy of when to go after those entry points, either now or to be patient with a pending order, using the technical analysis to zero in on where I want to enter and exit the trades and when I want to enter and exit. Is it uptrending now? Is it downtrending? Do I like the support level? Where's the next resistance level to get out of a buy trade, etc. Okay, and that's kind of what we walked through here with these two trade examples, one being a market move, one being a pending order. And before anyone asks, you can't put AvaProtect on a pending order. I wish you could, but the price determination can't be known in advance. The price of the protection per day, per hour changes as the market conditions change. So you can't really approve buying the protection now without knowing what the price will be when it might hit the entry price on a pending order. So only market moves can use the AvaProtect protection system, and pending orders you have to set up without it. You can use the standard stop loss on pending orders. All right, everybody, I think this is a good place to stop. Let me know if there are any questions, comments before I sign off. Okay, thank you all for attending. It was a quiet group, but a nice group. I didn't see anyone drop out since we started, so thank you for staying for the whole thing. It must have been interesting enough. And good luck with your trading this evening and into tomorrow. Just be careful with your risk management. The CPI data is really a big deal for the US market, and given the US market is the largest economy in the world, it'll move the other markets also probably as the CPI data comes in. So just be a bit careful, especially as we get closer to that data release tomorrow out of the US. All right, everybody, good luck with the trading and bye for now.